What is daily bias? So in this video, I'm going to talk to you guys about what daily bias is and how you can exactly pinpoint what daily bias is, right? So a lot of people, they think that daily bias is based on the closure of a candle, the closure of the daily candle on the upside or closure of the daily candle to the downside. Same with the weekly candle. Okay, but that is incorrect. Why? Because that can only work until so long, until price reverses, and then you're caught in this everlasting battle of okay, when it closes below, I will sell, when it closes above, I will buy. But it's not the case every single time. In fact, if you put it in a statistical study, you will see that it's not that significant. Okay, you will see that it is not that significant. So why is daily bias really important? Now, in order to take a trade, you need to know the bias. You need to know the market's direction, right? Simply looking at bias in terms of momentum is extremely incorrect. Why? Because I have seen on Twitter or on X, as people would call it nowadays, because I guess that's its legal name now, is that a lot of people with funded accounts, the average holding time for a trade is less than 1 minute. Okay, sometimes even less than 5 minutes. Why is that? Well, they come to this conclusion for themselves and for their community that, oh my God, if I know the bias, I can hold a trade only for less than 1 minute or less than 5 minutes. But that is not trading. That is, yeah, sure, that is high frequency trading. But us humans, if you take into consideration commissions, spread size, and all that, this type of trading is very, very, very risky. Why? Because you are assuming you have a bias when in reality it is not a bias at all. Why am I saying that? It's because let's say you have a futures account, you trade gold, and you take a sell like this over here. It lasted for what, like half an hour. But some people they only capture this small move only and they call it trading. They say, okay, the daily bias is bullish, therefore I'm buying, and wow, look at that, it went so well only to see that this happened next. Sure, if you're making money, that's fine, but you won't be able to make money consistently in the long run. Because imagine you get that daily bias being bullish, right? You say, let's say you get a buy over here, you keep your take profit here. But now it reverses. You can say, we hit my stop loss, or you can say, okay, I was wrong for today. But it's very easy to come to that conclusion of saying that you were wrong, right? When in fact, you were extremely wrong. You were never right in the first place. Okay. There are very, very, very precise signatures in price that will tell you whether price is going up or whether price is going down. Now, Bitcoin this week is not showing us any of those signatures at all. In fact, if you look at my Telegram group, I told you guys, just let go of Bitcoin for the week. It's going to gangbang you. Why is that? Because Bitcoin is stuck in its Monday range, right? Look at this. Do you see anything that is tradable over here? No. This is the Monday range. You can trade my daily bias being bullish and go up. You can trade my daily bias being bearish and go down based on the Trade Easy dashboard. That's correct. But there is nothing else that you can do. Because, for example, if you took a buy here, let's say, and you look for a take profit here, it never reached. Took a sell over here, let's say, you keep your TP at the relative equal lows or stack liquidity. What if it never reaches? Yeah, then it's very easy for you to say, ah, I was wrong. It did not work out this week. Well, there is a very specific way in knowing, or rather approach in knowing whether you're going to be wrong completely or whether it is reasonable for you to be wrong. Now, if you're going to be wrong completely, that's fine. And if you're going to be wrong in a reasonable manner, that's also okay, right? But don't come and suggest or mislead your audience by saying daily bias is bullish and just capture a 10-point move. It is not right. It is not right. You can't trade. You don't know how to trade. Okay. You have no clue how to trade. Now, let's take a look at how to actually use daily bias in your trading. Okay. So let's take a look at a case study. Let's take a look at Trade Easy, my dashboard over here. It's going to give us the bias, right? So if I come to yesterday's price action, so we'll take a look at both gold and Bitcoin for yesterday's price action. Okay. So we can see right here that our daily bias is bullish. How do I know that? How do I know that? Because I got to wait a bit. Look now. 15, 20, 25, 30, 35, 40, 45, 50, 55, 3. Okay. My daily bias is bullish. So I know that I can look for a buy, right? Because my daily bias is bullish. Now, I have this candle here. We broke structure there. And the candle that took out that structure is this low. So I'm going to look for a buy when price takes that low, as you can see. Okay, and this is my reversal signature, and I'm going to keep my buy stop. Now, if you guys watch that video, you know what I'm doing. Keep my buy stop there, my stop loss here, and I'm going to utilize this to get my TP. Okay, with two standard deviations here as my TP, as my partial taking point, and you will see if you check FinServ Corp Instagram, you will see that I took this trade. Okay, I did take this trade. So you can see that price smashed. I took partials and I took 80% off and I closed everything because it wasn't worth it because uh, it just started moving down. Okay, and you can see it still worked out rather nicely. Okay, and that was good. So now we know that we have a daily bias, and because I know that we have a daily bias, I can now confidently take this trade to the upside, and then my day is done because the social media has you're intoxicated by this entire thing of intraday trading, ping pong trading. Yes, I was into it once upon a time, but it is the most wrong way to look at trading as a career, as your own career for yourself, or even as a hedge fund, or if you're running a fund. It's the most stupidest thing you will ever see. Yes, high frequency trading algorithms can do it because high frequency trading algorithms, they have access to data, liquidity pools, and all of those things. I love them to do that. But we don't. Yeah. Sure, you can get lucky and you can take these scalps, but the commissions are going to eat you up in the long run, right? It is high time that you understand day trading is as simple as a one and done thing. Why would you want to give away profits that you made earlier on in the day? It's stupid. Indeed, it is very stupid. Okay. Now, there are ways in which you can take multiple trades in a day, but that also is confined to a maximum of 3 trades per day. Okay. So if you want information on that, you can definitely join Uncle Shondi's trading there. Right. So this was gold. Now, if you go back to today's price action, you will see that gold, we have a bearish daily bias, but now it's starting to spike up. It's going to go up, or it's going to go all the way up over here. Now, why is that? Well, that is because look at the Monday range, which is around, I think, here, Monday range, right? You can see that we are trading above the Monday range. So you can treat Monday's range as your Asian range, right? Telling us that the weekly bias, of course, weekly bias is bullish. Okay. So if your weekly bias is bullish and price does a stop hunt to the downside, that's all it is. It is a stop hunt. You can still look for longs. So these are the only instances in which my daily bias must be flipped. And you can see that the London expected condition and New York expected condition is a bullish seek and destroy, meaning I can look for buys. And I am in a long right down here. Stop loss at break even, of course. Okay. So let's see how this plays out. Now, if you take a look at Bitcoin, okay, if you take a look at yesterday's price action on Bitcoin, you can see one thing. If you come here, what can we see? Let's see what we can see. We can see that the daily bias is bearish. Okay, and we cannot say that this is going to be invalidated in any way, shape, or form because we are stuck inside of the Monday range. Okay, see, Monday's range is here, we're stuck inside of that. So we can't really do anything. We have to follow the bias, right? This is just, okay, each day is on its own. When you're stuck inside of a massive trading range that's of importance, each day is its own trading range. There is no storyline over there. Okay. So on this day, which was yesterday, which was the 22nd of January, 2025, you can see that here we broke down. And this is my macro timing, right? So you know that price is going to induce and go lower because the daily bias is bearish. Okay, now from here, if I just take a look at this right over here, if this is the point in which we broke structure, all right, and this is a point in which we broke structure here also, we know that this is the candle that took it out. So this is my structural inducement, yeah, and I can look for shorts. From there, I will consider I will definitely consider my shorts. And if you are a user of Trade Easy, what else can you do? You know that you can set the settings of Trade Easy to the London session, 2 o'clock, see over here, London session 2 o'clock with bearish signals activated. And you can see if you are getting a sell signal. And if you do get a sell signal, well, what can you do? You can take it, no? There you go. You get a sell signal. Look now. Look at the right hand side. You get a sell signal. Price goes up here one more time for this very special type of inducement there. Unfortunately, I can't let you guys know that. Here, you get a sell signal. And once you do get that sell signal, what can you do? Take the sell. Boom. It is as simple as that. Okay, it is as simple as that. Now you are following this as your daily bias and you take that sell. So essentially, what you will be doing is you will be taking a sell here, stop loss above that high, and your take profit, of course, is going to be a liquidity pool, right? So what is this liquidity pool? Yeah, what is this liquidity pool that I am so interested in? Right, I am interested in this very special one here. Okay, so let's see if it hits or if it's on its way to getting hit. All right, so now we're heading into today's price action. And I think it hit. Not yet. I guess you can take partials, maximum partials, and okay, it hit. So it hit, right? And then you can see the reaction. Why is it reacting? Because this is a very special liquidity pool. All right. Now, coming into today's price action, you can see that the daily bias is bearish. And the New York expected condition is seek and destroy, right? So we understood that the weekly bias is bullish, as you can see. Here, the weekly bias is bullish. So okay, does that mean I can take a buy? Yeah, okay, I can. But it is very difficult until and unless we break the Asian high. Yes, I can take a very risky buy over here. Yeah, but that's all there is to it. That's all there is to it. Prefer you would wait until this hits, this breaks. Sean, if that breaks, then I literally let go of what? 200 something pips. So when price breaks, it's going to retrace, right? Once it retraces with the inducement candle, what will you do? You can still take a high risk to reward trade because we understand that when price hits that inducement, it's not going to go any lower than that. Sure, maybe by sometimes 5, 10, 15 pips, but apart from that, it's just going to reverse like man. So what's the problem? You won't be missing out on anything, right? So as you can see, Trade Easy literally helps me with bias, helps everyone that uses Trade Easy with bias, and all I have to do is follow it, think to myself, is this a good trade or not, and then take it. Okay, so if you are interested, you can definitely get Trade Easy. You're actually getting Trade Easy for free once you join Uncle Sean's trading den, which is the this one over here, the WAP over here. You can definitely join Uncle Sean's trading den and know shit that you will have never thought that you would know. Okay, that's pretty much it. All right, so if you're interested, you can get it. The link is down in the description below. I'll see you in the next one. Good luck and good trading. Stop falling for scammers. Stop falling for people that are not me. Stop falling for scammers. Stop falling for students of mine that don't know jack shit. Because from what I know so far, they all closed down their groups. With that said, good luck and good trading. Bye bye.